Hey, good morning. Today is Saturday, August 12th, 2023. I want to welcome you to a live broadcast of Motilnet. We're going to be doing some technical analysis and some charting on Friday's close based on the top 10 performing most volume on US stocks and equities. So we have the current chart open for AMC, everyone's favorite pastime, AMC. All right, so what are we looking at? So basically, there was some volume on Friday, and it seems like there was quite a bit of volume based on Yahoo. And let's take a look. So basically, we have the 15-minute chart open, and we're going to take a look here right now at some of the action. So there was news yesterday from the judge, and this is where a lot of the volume came from, was basically that regarding the APE, and basically with APE, I believe they're going to be doing the conversion. We've got to look at that, so don't quote me on it, but it has to do something with the APE. I don't follow AMC directly, so I'm not very in tune with their daily of what's going on, but it's here at the top of our list. So the 15-minute basically shows us a lot of stuff. Now what we want to do is take a look at the first level down. So that was cleared out pretty easily. But there is a support zone. So this blue line was a support, so $3.84. And that goes back quite a while. So that was the lows from June. And when it was playing in this channel, if we remember, in July it broke out, got up to $8. Anyways, so it's been kind of recorrecting that whole candle and fell out of the channel and really got smacked after hours. The buyers tried to come in 6:30, 7 o'clock, but they couldn't really do much. So yeah, that being said, it's really, it has a lot of different risks, mostly company risk and headline risk. Again, I'm not really into AMC. I don't play it, but we're talking about it because it's here on the top. So what we want to see, if you're shorting it, well, you would have wanted to short it Friday. That would have been great. From around $5, you get that down. Now it's at $3.99. Maybe Monday it continues down. If I think what we're going to do is let's look at the daily chart. Let's get rid of that. So here's kind of the daily chart. It's been topsy-turvy. You have a nice peak and then another valley, and it's kind of just playing, right? Except these waves are getting smaller. So you have lower highs, lower highs. You had a peak, okay, because of the ape news, but it didn't hold. So basically what we want to see, let's grab the fib. So if we take the low, sorry, let's do it the other way. Take the high from that whole session, bring it to the low. 50% from the top, which was 854 and 376, so you basically have just about $5. So the 5.0 falls into $6.15. That was exactly where it retested, and this is now also a level of resistance because support becomes resistance. And at one point, if we bring this across, it was somewhat of a support. Bring it farther across, it was a support. So now it's going to become a resistance. Here's another level. Here's another level. Did you see how this is channeling? And every time it falls into the next channel, it just can't get out of it. It's just stuck. So AMC is like beating a dead horse. I don't know. But let's say now let's get back to technicals and how the fibs work and everything, and let's see. So if this candle is anything of significance, this is obviously a major bullish engulfing. So if we measure the top of that one, and we take it just to the bottom of that candle, so that's just basically a daily candle. So the low on that was 435, the high is 624, so the mid-range was 529. Well, during the week, it tried to come, and 529 is a new resistance. Yeah, 508 is perfect resistance. So now, where did it close? Just below 508. So it has to move up above. Now, the red line is the 200. It keeps tapping it and failing. But at the same time, the blue line is the 50. It's staying above. The yellow line is our 8, the yellow brick road. And the white is the 20, which is our trend. So it isn't a bullish trend compared to previous, let's say 2-3 weeks. But all we're doing is retesting previous high. So this lines up that you actually beat it. So that is a higher high, and these are higher lows, right? So as long as it can get above these lows and move into some action, you want it to cross the 200. So if we do get this going, our next line will be the 168, which is $7.41, which happens to be, again, another previous area. Then you're looking at $9.30, which is the top of another zone that we looked at over here in September. $11.19, and then ultimately $12.36. If you break $12.36, like this 11.49 is going to be tight, but if we break 12.46, then you're looking at 16.27. Again, a lot of this action is going to have to do with the float, how many shares are going, and about this ape that if it converts into shares, that's going to be major dilution for AMC holders. In which case, everything here is nullified, and there's going to be heavy selling pressure once those ape shares convert. This can basically, for sure, almost come down to the 50, so 460. So if you want to go long, ideally, it'll be somewhere around here. Let's say around $4, between 415, 420, and you'll want to stop like literally just below this, like at 380. So you give yourself about a 10%. So basically to about 380. So 10 to 15%. If you can accept that as a potential loss, then you can play the game. Just let it ride as you're moving up. So take profit zones. So basically, if we have the look that kind of comes down like that over the next week and holds, and then coming into September, it starts curling up again, that's a good sign, because then you have a double bottom and it's confirmed because it's even a triple. Like 1 fail, 2 fail with a higher low, 3 fail with a higher low, go. So take profit. One zone again will be around 520, then 590 to $6, somewhere in there. Take the ride, go to about 750, 850. And then what you want to do is you basically, once you take your profit here, put a stop for the rest here. Let it ride. You get your profit here, put your stop just below. Let it ride. Get your profit here, let it ride. Play the lines. Now, if you want to do this properly, let's say you have 100 shares. So we like to tier in and tier out. So if you're just buying 100 shares blindly here, okay. But really, you'd probably want to buy like half your block here, 50 shares. Once you're confirmed it's moved out. So if you're buying at 420, 50 shares, and it breaks 460, buy your other 50 at 460. Take your first profit at 511. So you have 100 shares. So you want to sell 25% at 511. Your average cost, if it's 420 and 460, your average cost will be 440. So you have 70 cents. So 70 cents on a quarter, it's about 15 bucks roughly, $12, $13. So you take your first one. On the next level, you're going to take about 50% of the remaining. Some people do 50%, which means you're going to sell 50 shares and have 20 left. I like to sell 50% of the remaining, so basically you'll have around 33 to 35 shares you sell. So let's say you sell 35 at $5.99. Okay, so you sold 35, you sold 25, so you've sold 60, you've taken profit. Now you're protected, you hold the line for your remaining 40 at 570, let it ride. Then you want to take 50% of your 40, so sell another 20 at 703. You're still holding 20. You still have a stop at 697. And then take your last profit at 844, or just let it ride. When you know that that's the zone, just drop a stop over here and let it go. If it breaks the zone, good. But again, most every time it's going to retrace and bounce. It's going to retrace and bounce. So you want to be as close to but just below the retracement line as possible. And it's always hard to judge it. And a lot of people get stopped out because they want to, 3-4 cents. And I'm going to show you something on the next chart that we're about to open right now, which is going to be GNS, Genius Group. So I'll tell you what happened here yesterday. So let's get to that one in a second. So do you see what our target is here? So if you're at 435, you basically have room for a 2x if you don't want to be greedy. Play the channel because it's almost for sure it's going to get sold off if it runs. But personally, I don't even know if we make it back above, let's say, the 620. But anyways, play your lines and be safe on that. Genius. GNS. Okay, so I already have some stuff plotted out because that was one that we were playing yesterday on our live group. And $1.97. My target was $2.03. That's what I wanted it to clip because 209 right here. And then you have this line right here. So I was looking for $2.03, but that had to happen yesterday because, again, this was just going to be a day trade. I had no interest in swinging it. Fridays, we call it no baggy Fridays, and we're going to stick to that. Okay, so I already have some charting set up over here. These are all rips based on the 15-minute. So let's take a look at the 15-minute, and then we'll come back the other way. All right, so Thursday, I was not in it. Thursday, I just have the line set up because we had a setup reference for yesterday to actually play the day trade. Right? We have to know where our stops are. We have to know where our entry is. And we have to know what we want to do. So, on Thursday, basically, we did a measure out. And I just brought it across. So what is the measure out? It was here. So if you see this line here, that coincides right here. It's the 1.0. See? So I'll bring it back. And I see it right there. So we wanted to take the first run. That's all we measured here is the actual, just the first run of the morning before the sell-off. And you see it brought up the, let's just zoom it in. So we brought up the 20 and the 8. So the 20 has been nicely working out since a few days. We did not catch the full move. Again, we're not necessarily interested in catching the start of the move. On a day trade, we want to kind of catch just the quick move, get in, get out, 20, 30%, quick, easy. So this is Monday's chart. Wednesday's chart. Wednesday it's measured out, and where are we here? Then we have, okay, this is Friday, this is Thursday, this is Wednesday, so this is Tuesday, and this is Monday. Monday we didn't look at nothing. Tuesday we pulled up the first reference. So you can see here, I brought that right across into Thursday. Again, we want to know where the 1.0 is because that's going to be our stop if we were going to play it any of these days, right? So the lowest position we think it can come back to, in this case, was 67.87 cents. Again, we did not play it on Tuesday, Wednesday, or Thursday. We played it on Friday. But let's get to it. Now, Thursday we measured it out, and then we can see on Thursday, by measuring it, the 50% line was 6956, and it was holding it, which is important, right? We talk about that all the time. It has to hold the 0.5 on the retrace. It's okay if you're retesting, but obviously it's better if you just tap out. You beat the previous high, that's still a higher high. Otherwise, you're touching it. The lows should be higher. You understand? So here, so we're at the 0.5. This is the 1.0. It played in that channel. Then it stuck to the 0.5 and the 1.0. On Thursday, what we did is we measured out the first 15-minute candle. Sorry, here, let's bring it back here. So what we did is we measured out from this was equivalent to the low on Wednesday. Doesn't really make a difference, but here, if we bring it specifically for that candle on Thursday, that's the opening candle. We like to use the 15-minute openings. So that happened to also work out to be the close. So that's important. That's still bullish, right? So during the day, the first 15-minute had a high of 80 cents. It popped up, popped below. The 50% on that is right here where it came out to at 78 cents. Got back, held, and allowed, again, the 8th to make its way up. Now, targets off of that first candle would be 86 cents, 94 cents, $1.04. Well, it didn't happen during the day. So some people would have got frustrated. A lot of people, based on this wick, probably stopped out at around 78 cents. So it means a lot of people probably stopped out around 80 cents as opposed to waiting. That's right at VWAP at that point. Right? So here you can see it. It never came below the 50 on the 15. And it was riding, see the white line? It was riding it, but it never confirmed down below. Now this, after hours at 5 o'clock, potentially could have been a reversal. but it failed with almost no volume. Look at the volume. That's the thing about after hours. A lot of the action is just to give you an idea, but really it's don't set your life on the after hours price. Okay, so that was Thursday. Now we have some action. So Friday morning, let me delete that so you can make things clear. So you can see it clearly. Okay. So Friday morning, we looked at this particular candle. Okay. The color should be pink. It should be the red color. My bad. So we were looking at it downward from 0 to the 3618 and the 324. So 81.87 or 79.45. So basically 80 cents. Now, looky. Doesn't that line up to basically what it was playing on Thursday? So what was once resistance, it couldn't break it, now flips to support. And that's what happened in the overnight. The resistance became support, and that test was confirmed at 10:30 on Friday morning. So, I already had this on my scanner from earlier because there was some volume picking up you could see over here in the 7 a.m. whatever. So we started looking at it. And again, GNS, it's one of good volumes, so it's part of our trading group. Like we look at it regularly. It's one of the professor's favorite current stocks, and ironically, GNUS, which is now Tune, is the professor's least favorite stock. So it's very ironic that they were both called genius at the same time, but GNUS flipped over to Tune, Toon. Anyhow, so our support line now is at 85 cents. What I wanted to see yesterday is a clear break of the 8. So if you look again, I wanted a clear break of the 8 crossing above the 20. So this is when I started measuring things out. So the first candle that I saw as the reversal, let me clear that for you so you can see it. So what we're going to do is measure the first candle of the reversal. Again, we use the 15-minute. And you never have to be the first one to the party, so you don't have to buy on the first 15-minute candle. It's not usually a suggestion because you want confirmation that it's actually a reversal and not just a fake out or stop losses or something. So measuring the first 15-minute candle, we went from 87 cents to 94 cents. Now, the next candle is what the important one was, and I wanted that as the confirmation. So the 50% zone is at 90.93, or let's say 91 cents-ish. But this candle went down to 89 cents. So the candle opened, in theory, red. Now we are using Heiken Ashi candles, so they work differently. And I like to use them because it gives you actually clear direction more than red, green. Red, green, it actually based on the momentum and it helps you understand what you're doing. Anyhow, so the candle stayed green. It worked its way back up to 94 cents. Now, on the next candle is where we took action. So right here, right when it went to 92 and it started to push, it made a push up to 97. We jumped in on this candle. It was around 94.5, 95 cents. After fees and everything, it was about 96 cents, 95.8. And we watched it. Now, if you look here on this candle, it's kind of flagging. You have a lower high and you have a higher low. Sorry, you have a higher high and a higher low. Excuse me. The next candle was a beautiful break. So what we did is we came in at 95 cents. We had a stop right here at 89.5. Why 89.5? Well, that's a support zone. and it's just below the 20. I wasn't worried about it going below the 8. It's the 20 you want to stay above. Now, as the 8 and the 20 separate, that's absolutely bullish, or flip side, that is, could be bearish on the red candles. But on the green ones, this is absolutely bullish. You have the crossover, you have the trend line crossing VWAP, VWAP turning significantly upwards, and VWAP is the volume weighted average price. So this was the right entry. So we took it, and basically the next candle we let it run up. Once it confirmed the $1 zone, which finally came at about 11.50 or so, it needed to hold. Inside this candle there was a lot of action. I'll show you on the 3-minute really quickly. Yeah, so here we go. So this is the candle I'm showing you. So this is the 3-minute view of that candle, right? So I had grabbed it on one of these two candles on the push. It did come back, but this is the 3-minute chart. You don't use the 3-minute until after. Start with the 15. It did test the 20, but it never really broke below the 20. There were a lot of buyers coming in on the 20, on the 3-minute. So I was convinced we were going to be good. Once it broke the $1 zone, what we did is here we are. So once it broke the $1 zone and it made a rush to $1.15, you have to understand where could it come to, right? So $1.15 on the high. The low of that candle is 95 cents. So you have 20 cents. So $1.15 to half is basically 105. So you have to expect on the next candle that it can come down to 105, and in which case it came down to $1, right? So you still want it to hold this 168 line, so 9952, and you're still not broken out yet. You're good. So all we did is we moved our stop. The stop originally was down here. We had moved it up to, I believe it was around 96 cents, right around our cost, and let it go. We didn't even touch it. Took the first profit around here. It was at like $1.24, $1.25. And then we had the stop moved up right to here, which was $1.10. And we let it go. Now, here it started getting a little bit fishy, if you can kind of see. The volume for the buyers were kind of fading out. This was during lunchtime. We just moved the stop up, went for lunch, chilled out. Came back at 1:30 to actually see, okay, we did not stop out and we're still going, which was good. So all I did is I had moved my stop up to $1.23 and let it sit. I took another profit at $1.40. It was a market sell, so it was at $1.40. I think I got paid $1.38, $1.37, whatever. There was like a rush for profit here. And then the last piece, it just stopped out at $1.23, and then it collapsed, which is fine. So basically, we're talking about a nice entry from average of about 96 cents. We got $1.25, 23, and 40. The second one being our favor. So again, we did 25% sell. I did 50% of the rest over here and just let the rest stop at $1.23. The net average profit was about $1.30, $1.29. Sorry, that was the average sell price. So if you take that minus my cost of 96 cents, it's about 29 to 30 cents. So not too bad to make around 30%, 35% net after fees in a span of 3 hours. Now, we'd like to do that every day on everything. So there was good volume. Now, what's going to be the price action Monday? Well, hard to tell. I think it all depends on what happens here. I'm what I'm looking for, and I'd like that to actually happen personally, is let it come back to 98, fail, come back to this zone around 85, and start again. But if it comes to 85, it's going to be testing the 200 because the 200 is going to be somewhere like that. So if it falls below the 200, then back down here, which will be like the support zone from the beginning of the week. This is typical of this stock to do that. So you have the identical thing that happened. So don't be surprised if it's not going to continue. So if you want to do an entry, I'd be looking for an entry somewhere between like the 200. So whatever the 200 is going to be at based on the 15-minute. If we go to the daily, the target would be around the around the 200 on the daily, so around 160. Again, my target yesterday was $2.04 if it was going to run. Now, if you're still hanging on and you're hoping, and your stop didn't get triggered, let's say you were at 118, 116, you may have like still be in the game. But there's weekend risk. There's a lot of risk with this. Headline risk, all kinds of stuff. And if we look at the RSI on the daily, it's like getting overbought. So this kind of has to come down to meet up. It happens all the time. So just be careful. Okay. Oxy. One of Warren Buffett's love childs, I guess. He likes it, he doesn't like it, he's loading on it, he's holding it, he's selling it. I think for now he's still holding. He may have taken some profit. Again, it all depends. We don't necessarily get his personal numbers right away. Yes, you could look at Berkshire's numbers, but Warren also has family office and a bunch of things outside of Berkshire, so you never know. Anyways, oil was playing the $83 zone this week, WTI crude. So obviously companies like Oxy Petroleum or Halliburton, MRO, Suncor. I mean, there's all kinds of oil companies. And of course, like US Oil, if you're playing that ETF. And then you have the XLE, the Energy Spider. So that's option to play. Anyhow, so let's take a look at Oxy since this was another volume mover for the week. It's a nice dividend one. There's a dividend coming out this week, but let's just see the channel. So the low end of the channel is 51. Higher end of the channel is 75. It's playing in the middle. If we go from top to bottom, and there's a reason I'm doing this. This is not a growth stock. This is more almost like an income play. You collect your dividend. It's oil, so it's based on the commodity. Right now, oil is, again, it's going to be bullish for the next 10 years. We're going to 200, 250 a barrel before the end of this decade, and I think that's actually coming closer to 26. Just my current prediction, if we want to talk oil for a quick second, is basically we're at $83 on WTI right now. We're going to have the seasonal slowdown, so that's normal. So whatever. In the case of WTI, the slowdown might be 78, 77. I don't see it going much lower than that. That's around a major support zone. And then it's going to turn around and just kick ass into winter as this is going to be a really cold season. Natural gas premiums are already picking up. Yeah, so the energy space could be really interesting. Not if you're driving a car, and not if you need diesel or if you need the oil. However, if you're playing it, it could be really, really good. So the 50% zone on Oxy is 64.38, which is basically where it's been sitting, and it happens to be also the 200 MA. Tap, 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 finally broke up above it. We take the candle. It needs to hold that 62. It's kind of been doing it once it broke it. So the next breakout candle is here. So 66 is the 168. Look at that. Supported it. If it can break out of the 66 and as oil is going to continue upwards, Oxy will continue upwards. So eventually you'll get to 75. And we have to watch oil, but look how similar these things are, right? And oil itself is doing the same thing. So one of two things. Either you're going to come, retest the 200, trail it, and continue, which is almost what's in the idea. Or maybe a sharp sell-off bounce, sharp sell-off below the 200, come to the 50, because the 50 should channel up like this. Test the 50, come back to the 200, play the 200 to 50, then finally the 50 breaks the 200, and guess what? You have a golden cross, and then this guy becomes your golden goose. Get back up to 75, retest, and new all-time high. Which, okay, not all-time high, but new high for anyways the last like several years. Now what you want to do is, if that's the case, 88, it's got to make sure it still stays above the 60 zone. And then once we get to 88, then next major zone is 100. And then you go for all-time highs at 112 and break it. And that's basically when oil is going already for probably in the 130, 120 range, around 60% higher than where we're at right now. So that could take place over a while. Now, remember, there's a dividend coming up. So the dividend is on Thursday, September 23rd. 18 cents. So when they pay the dividend, there will be price dropping by 18 cents because that's how the dividends pay out. It will not change the market cap because those that auto reinvest would automatically be reinvested, and market cap and pretty much everything else should stay the same. Those who don't reinvest, whatever, they'll miss the boat. But of course, it's part of the things. But it's only 18 cents. It's not like a $4 dividend that you're going to get a 7% move in a day. All right. Next one is applied APLS Pharmaceuticals, APLS. Wow. All right, so they had earnings the other day. They were positive. It's green. And they beat by surprise. And they beat, and they beat, and they beat. But what can you do to get back value? I don't really play this one, so I'm not too familiar with it. But again, we're talking technical analysis. So a couple of days ago, you do have finally a small breakout. The first one, all targets are hit. Bring this in so I can show you even closer. So in measuring this guy right here, we could see immediately that all targets are hit. This red line is not the 200. The 200 is way up there, up on top, and we'll show that. This is from a buy-sell program. So it did convert to a buy. So they did say buy. Now, 33.24, $23 after the earnings. That's pretty good. But the 50%, be 28.21. The 20, so the white line is downward, but the 8 is converting up. So what you'll probably see is something like around 25, 27 in that zone this week if it breaks below 28. Otherwise, you want it to hold at 28 and continue. And then your next lines will be 39.86, 50, 60, and 67. Now, the blue is the 50, the red is the 200. So this is coming into what's known as a death cross on the daily. So if the 50 continues down, this will be a death cross and this will just all die out. However, if this action continues up, it'll actually force the 50 to hug and move above only if this guy can like really move. But I think it's going to be more like the 50 is going to make its way like this. The 200 is still kind of staying like that. You might get some price action to around $50 and then fail. And then it happens to be right there. Look at that. Like, this is all support resistance areas. 42. And then through $50 being the channel. So it has to get through all of that. And it has to start by breaking here at 34. Look at how that lines up almost perfectly. See? Okay, next on the list is CVX, Chevron. Very similar to Oxy. It's been playing the channel. This is in a death cross, but it's trying to break out. The respective channel is basically 180 from 140. It's been playing basically the 50%. Let's grab the top to the bottom. So right now it's been channeling. It has to actually break this 50%. So if in the next days it breaks above the 50%, it's going to also break the 200 at 166, make its way to 177, needs to hold 170, and get up to 190. If oil breaks down, $144. Again, I don't think that's happening. Personally, not necessarily to drop it 10%. Something really has to happen for it to break out of that channel. So ironically, look, boom, 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 up, maybe. So if you're going long on Chevron, what you want to do is basically, if you have to buy it absolutely on Monday and you have to get in because you want that dividend, and the dividend is on Thursday, so basically you have to have that, the X date is Thursday, so you have to have that before X date, you have to have that during the cumulative date, CUM date, so that's 2 days before. So basically you don't want it on Thursday, you have to get it on Wednesday or Tuesday at the latest. And then you can earn yourself $1.51. But what's going to happen is that the price will drop by $1.51. So the question is, what's that $1.51 worth for you? Let's take a quick look here. Let's just get rid of that, even though that actually might be the real channel for this next few days. So you're going to lose $1.51 from whatever the price closes at X date. So on Wednesday, if it closes at 160, then it's going to do X dividends and basically somewhere close around 158, 50, 160. And that's working out to somewhere between the 50-day and the 20-day. So you see how this candle is. I think basically Monday you're going to have a little bit of action, people trying to buy it for the dividend, while the 20 is going to be trending here. Tuesday, you're already going to have some people selling it because they know it's going to go down $1.50. If anybody bought it here, that's $1.52, and that was just like a few weeks ago, 2 weeks ago. So if you bought this play, or even if you bought it off the 20 at $156, and you didn't take profit at 163, and you didn't take profit again at 163, well, that's on you. But depends how you're playing it. Again, it's not a growth stock, and it's not a momentum stock. It's a long-term, it's an equity that is based on a commodity, so you have commodity risk. But it's a good dividend stock, so this falls also into income accounts. So the resistance support is here around 161. So I'm saying it fails out Monday. Tuesday continue to sell off a little bit. Wednesday, Thursday kind of come down to 155 and then work its way back up. That's the most likely scenario. And then it has to break 165. If not, maybe some selling pressure continues, retests around 154. So if you have to go long on Monday, you're going to lose money here automatically. And no matter what it closes out on Tuesday, Wednesday it's going to go down, Wednesday, Thursday. It's the dynamics of it. It's the way it is, because people are also going to automatically sell their shares. There's options that are going to expire on Friday. There's a lot of stuff. So people are going to be looking for it to hold around this level, 152, 150. So do you really want to get in at 161? If it's for your long-term objective and you're just starting a position, we are in a flag. But flags can break and flags can fly, right? Right now it's below the 200. It's not always the best place to start. However, this is the type of stock that generally has been playing the 200. The last time it fell below was just into earnings. It had its dividend. See how it had the sell-off on the X date and then just continued. So you got to watch the 50. So if we could stay around the 50 and bring the 50 back up into a golden cross, because right now it is in a death cross. And the last time a death cross happened, basically that was October 2019, just before, imagine that, huh? It's almost like people knew. Just before COVID, everyone started shorting it. And then it took until January 21. So it took about 14 months to recover. And then it tested it and went. Tested it, went. And this time it broke. Like, the reality of reality is that it'll come down to like 130-ish and go. Or 130 and no. There's a lot of events, there's a lot of stuff. So if you're opening a position, like I said, TRN, Do 25, 30% now, see what happens. If we get continuation, it breaks the 200, buy another 40, 50% of your target. If it breaks it, go and just add it for your long term. If you're playing it short term, like really just have tight stops. We already talked about the zone, boom, boom, bounce, bounce, go, go. Just have the stop and ready. If you own shares, now this is just the last call on this. If you already own shares and you want to protect yourself, sell calls. You can sell calls and basically protect yourself. If you want to sell the 185s maybe, and you can do that every like week or two, or sell the monthlies once a month, or sell the quarterlies. But again, you got to play the levels so you don't get called away for nothing. But you can earn good premium. You could sell puts also, but if you're going to sell puts, really you'd want to sell like the 125, 130s. Keep collecting the premium. You're probably going to own them, but it might see 100 if that's the case. Be careful with that as well. All right. Next one we have here is Coca-Cola. This is the sugar beast of the world. This one used to be very rangy, but it's always up. It's always up because they're hedging against sugar. They know what they're doing. Look at this. Always up, always up. But this was the old range. Back in the day, for almost 10 years, basically played the range. A high of 32. High at 31, 32. Down to 22. And if you got lucky, you bought it at 10 or 18. Imagine if you were buying Coke at 10 or 18 in 2003. You see all these blue D's? That's all dividends. Here, they were paying 22 cents, 31 cents, 40 cents in 2009. And it's the perfect range. So what everyone used to do is basically would do like butterflies, or you can do you could do multiple spreads. You can do eagles. You can do condors. Excuse me. You can. There's a lot of cool stuff you could have done. Then it broke out of the channel. So this 132 in 2008 was the last draw. That was the last time we basically saw 32. And it became support, 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 support. Then the next channel line we're looking at up here is to 46, right? So 32 to 46, that's basically $14, so $7 is in the middle. Look at that, $40 becomes support resistance after that. There's your 50%. And then you had this channel. Basically, once you started this channel in 2014, you were playing 40 to 48. So you had a 20% game for 4 years. And again, Coca-Cola has always been very, very straightforward and simple. You buy it, you hold it, you collect your dividend, you reinvest your dividend, and just let it go, right? Well, that's what the game was before COVID. Buy, hold strategy worked, 60-40 mix worked. Everything worked. Interest rates, before the quantitative easing really started in 2010, after the global crisis. I mean, interest rates were 6, 7, 8, 10%, no problem. You have some years at 12 and 15%. But for now, people are complaining at 5. 5 is actually a healthy interest rate, ironically speaking. But let's not even get into that. So basically, 2019, everything's going good. Everyone's excited. Markets are booming. Wall Street Bets is pumping, getting all kinds of new people. And I think that was around the time when they hit over like a million before they really exploded. And then we say the S hit the fan, right? So basically, you had a top up. That was the new all-time high of $60, and it came to retest $40. Now, that was only coming back to the channel. So this breakout was from April 19 through February 2020, and that was the breakout of the channel. And it just blew right through the first support. But it did hold at the next line. So if you got your entry around $40, it's not bad. So again, the new channel is now 40 to 60. So you have a nice $20 gap again. It's better than a $7 gap. So from 2020 right through now. So now $60 becomes the new support. New all-time high is 61.73. Cola still very bullish. Now, accumulation, people are still buying Coca-Cola. They're still adding it to their accounts. Doesn't matter if the price is down. Accumulation is still very good. RSI, on the other hand, is trending down. But everything in the market has been overbought in the last few months. So what we want to see on Coca-Cola, you can come out of the 60, 57, 54, and make this the new channel. Which would be 53 to 67. So you have a $14 gap. So you're looking at a retrace to 60, right? Otherwise 46. Now, if you're starting a position, let's take the high, let's take the low of the current channel. It's riding the 50, which is good. So what you'd like to see, now here, first of all, let me show you. So you have a higher high. So you have like your W formation. We like W's. You have a mini W, except this was a lower low, but it's still higher than here. So on the weekly, it looks a little bit different. There was some accelerated growth, and then a back test. So let's just measure out the upper and see if we filled. So from 59, it told us it's going to go to 62. It did, it broke it, but then it failed on the next level. Some people would not take the first candle because this is a doji. So it's actually no significant reference to direction. So we'll actually take the first official buying candle. So this would be the reversal. And here we can see we hit exactly to the 423. And the 1.0 is right here. And look where it held, right on the 60. And guess what? That's again the support zone. So everything works out very nicely in this situation. So there's a few plays that can happen. There's a dividend coming up in September of 46 cents. I think this play is kind of what's going to be something maybe like that, get around the 58, and if you were good, it turns around, retests, fails, comes up. If you're opening a new position in Coca-Cola, um, it's only 46 cents. You don't really want to have stops on a long position. You're just going to keep accumulating. So ideally, you would buy about somewhere in here. Enter with 25 to 30%. If it goes, good. Once it breaks 62, add another 50% of how much you want to add. So basically, you're in for about 75% at that point. And then once it confirms the breakout above 65, go. Add more because it's going to go retest the all-time high and keep going. If you're adding over here and it goes down, again, don't worry. You're going to collect your dividend. Wait till after the dividend pays. See what happens. If it holds 57 to 60, somewhere in this zone, you can add a little more. Or you could wait to see if it drops. So again, you will kind of want to wait for the confirmations though. Don't just blindly buy. Or if you're on a set buying schedule, then whatever. It doesn't really matter. You're dollar cost averaging over the time of your purchases. Reinvest the dividend. So for every 100 shares that you own today, you're going to get $43 in dividends, $46 in dividends. Now dividends are taxable, so depending on the account you have. And that's an interesting new channel. We don't really want to see it break below and get into the old channel, because if it does, then like a good area to really load up would be here, like somewhere in that 39.40 zone. If it gets in there, add another. I can't even tell you because whatever. This is for educational purposes, so you can do whatever you need to do. But there's a dividend consecutively paying out every quarter, and it's growing. I believe they're adjusting it to inflation as well. So that's last year. Then they're gonna call out the new dividend. So it's been going up by 1 cent. Now it's going up by 2 cents. So the next one will be September. Should be like in mid-December, and you collect it and keep going. Your best bet, of course, for the long term is to have it in a proper registered account, like your 401k or your IRA or your TFSA or your RSP, whatever country you're in. Check with your local tax laws. Okay, next on the list, we have V for Visa. Now, Visa is interesting because it's kind of cyclical and works with the economy, and it's based on obviously how much people are spending, and they make a percentage on franchise fees and royalty fees from the carriers during a transaction. So, for example, if the processing fee is 21 cents or whatever, it doesn't really matter, they're getting a percentage of the processing fee. So they don't collect the processing fee, the bank collects the processing fees, and there's a bunch of intermediaries and all that. But Visa, MasterCard, they collect a portion from the banks and the intermediaries. So we have a nice channel. It is economy based. Again, the more people spend, the better they are. Now, the risk right now is the fact that people's credit cards are pretty much getting filled at a very quick rate. The last report I read is that the credit cards are currently higher than they were here before COVID. And that's not a good thing because basically everything that was gained and earned in those 2.5 years to everybody, I'm not just talking about Visa, has been given back by ways of inflation and gasoline and food and everything. And what about your mortgage? Did you have to refinance your mortgage? Well, luckily, in the case of my situation, I refied it during the crisis and I got an extremely low rate. Um, but at the end of the day, the rates are still higher and we still have to go back again to get them renewed soon, right? Every 5 years, 10 years, depending on the plan you have. So for the people who got a mortgage in 19 or 18, they're for sure coming up for refinancing and they're gonna get smacked around a little bit. So hopefully those interest rates come down, but like we said, 5% actually is healthy. So yeah. Anyway, so Visa. So cards are getting filled. Um, you have a nice run. The high was 245. The low on this was 175. The mid is 210. The 200 is up at 223. The 50 is up at 234. So that's good. And basically what we're looking at is again another retest of the 50. Sorry. So we have another, I don't know what's going on with the screen, but anyways, so there's another test of the 50 coming. And that'll be around 234. It already did a test below it of 227. So you kind of want to see this hold 227. If not, the 200 has to hold. It is in a golden cross, but very quickly that can turn back around. Keep an eye on people's spending. All right. The next one we're going to look at is GE, General Electric. So same thing, it's in a nice parabolic run. Its bottom was in July of 22. Has a nice high right now. It's at the 52 week for sure. The 200 is lining up around 90. It's been consecutively staying over the 50. It just paid a dividend of 8 cents. $80, $90. So that's a support zone. So if you're gonna get into GE, again, depending what you're doing, it's more of like a blue chip. It's a Dow component. That's if it goes down, so something like that, and then continue right back, retest and go. So if you're looking to get into GE, you might want to do a starter position around 103, add some more if it gets into that like 95 area. If it falls and just keeps falling, 64 is your next support. On the upside, we can get back to like very early levels, 160, 170, 200. All of this is very possible. 2009, it went down to 33 from its high of 253. So ultimately, like, yeah, I mean, there's a lot of room on this. And let's see what happens here on the fib. So 2618 is at 233, 304, 348. And look at that. It's record all-time high. I think there were some splits in here, but anyways, was adjusted at 362.46, which happens to be the 423. So on a longer scale, it is very possible. It just has to break out of the trend. Once you're out of this trend, boom, you can do it. So 161 and then 233. I consider this also for my long term. This could be interesting. This is a good one. Okay, let's put that back on the daily. And next one, we have a company called Eli Lilly. Another parabolic company, incredible. They don't stop. They always have something. They have their diabetes drug. Sugar is at all-time highs. Coca-Cola is at all-time highs. So that means Lilly has lots of customers. It is getting way overbought though. So I don't know about getting in at $528 a share. I'm really upset that I didn't get in actually over here when my friend Mr. 2% sent me a message and he's like, hey Jay, take a look at LLY. It's gonna break 200 and this SOB is gonna fly. Like it's never gonna stop. And I said, okay, but maybe it's because of COVID and they have some stuff with that. Wasn't even thinking about the fact that they were working on their long-term diabetes plan. And yeah, so we can see this had some incredible action. It's in a golden cross, absolutely. If you want to buy in, I would wait for it to retest like the 50, hold, come back, go back, and keep going. It's not really known to break below the 50 too often. The trajectory of the 200 is kind of like this. The 50 right now is kind of like that. So you might get the dreaded death cross. But they've never really had one. So it's very possible it just skims and keeps going. And keeps going and keeps going and keeps going. So upside target based on our breakout wick over here. $817.48. Wow, that could be incredible. I don't think that's going to happen this year. That's almost another 70% up. But over a few months, very possible. Or years, obviously. But the way they're going, they're adding like 40, 50% every year. So, incredible. Next and final one for today is MMM, 3M. They've just been in a downward spiral here. They keep trying to keep the 200. The 200 is holding them down. but the 50 is also now acting as support. So this actually does not look so bad in that respect. If we take the current high, from the low, it's at the 50. 50% retrace and the 50. So that works out. The action that we're looking at for the 50 is that the 50 should continue. Something like that. The 200, hopefully it just skims it. And then maybe that's going to come above, and then that's going to kind of drop below. So they're going to play kind of like this. And the only way that's going to happen is if you get a rip. So the target is about 150. If you're looking at buying in, you do have a lot of resistance at 107. But it's also 104, 100. So again, in this area. If you're going to buy in, if it's for your long term, you're good. Add it between 100, 105, maybe add a little bit more, 97. And if it breaks out above the 200, so 108 to 110, you can add more. It does pay a dividend. $1.50, August 18th. So you have an ex-dividend coming up as well this week. So if you want to buy it this week for the dividend, remember the price will go down. So you might want to buy it on Monday. It might get some action up. But again, if you buy it Monday, you still risk it coming down at least $1.50. So it'll be like to 100-ish. Either way, you're still good. Okay, so my throat is killing me, and we've been on for some time now. I want to thank everybody, and this was a great event. Hopefully you're going to subscribe. We do have a live Telegram channel. If you look below, you can get the link. If you like the content and you want to buy me a coffee or something like that, click the link for Buy Me a Coffee. We also offer a 1-hour one-on-one session. You can take a look at that, and we can go over any tickers you want and together. So this is a Motilnet production. I'm Shmi. Thanks, and